Welcome back to the Skycast podcast, the official Blue Sky podcast. This is Coach Matt. Justin is not going to be with us this week due to a little bit of a personal situation. Looking forward to getting Justin back next week. Until then, well, I'm your host, and we're going to have a fun show here today. So I got Coach Riz, I got Coach Becky here. We're going to get right into it here in just 1 second. But before we do that, just a quick reminder. At Blue Sky, we are currently running off a 50% off launch plans for all new members. Use coupon code WELCOME26. You can get that also in the description below. And if you're looking for an amazing bunch of traders all helping each other out, come join the Blue Sky Discord. Jump into Coach Becky's psychology lab every single week. Get into my technical lab and catch Coach Riz streaming all day, every day. Absolutely love the call outs by Becky and Riz every single day. I'm going to tell you guys right now, sitting down with these amazing coaches every day makes me a better trader, makes me a better investor, makes me understand the environment a little bit more. I want you guys to have that as well. So come join us over there in Blue Sky every single day. And with that said, let's get right into it and talk a little bit about the week that was. Coach Becky, how you doing here today?
I'm so good. I'm really glad that I have strong technical risk management because, oh my goodness, look at the candle pattern last week between Thursday and Friday because Thursday was such a sell-off. I'm like, holy bears. But for me, I can have a bias on like where direction is definitely down on the larger time frames, but I don't have to chase that direction. So thank goodness I did not get my butt kicked last Friday because I stuck to my system on my intraday trading strategy because look at that, bullish engulfing on the daily. Holy moly. So that was
Especially
an
after,
interesting end of the week to me.
oh my goodness, especially after that Thursday bloodbath. Like it was
Yeah.
getting scary out there a
Right?
little bit. I remember like all over Twitter that day, the end of the world was happening. Like every 5 seconds, like
Right.
this is the Black Swan event. You're going to wake up on Monday morning and the end of the world is going to happen. And all of a sudden, Friday's like, oh, wait a second.
Timed.
Boom, boom, boom,
Timed
straight.
all day. Yeah.
I thought it was, but it got shaky there a little bit. Good to see that recovery on Friday, and a little bit of a rinse and repeat saga to end this week as well.
Right.
Riz, how you doing today, my friend? Welcome to the podcast. Glad to have you.
Thank you, Coach Matt. Glad to be here. Happy Monday, everyone.
There you go, baby. There you go. Well, let's jump right into it, guys, and let's talk a little bit about that data this week. You know, Becky, looking at the overall week that was here, following the recovery we saw last week when we had that downward drop, broke a lot of support levels, recovered on Friday. For the better part of this week, this previous week so far, it was a doji fest up until Thursday, and now we're seeing a little bit of that sell off on Thursday. What's been kind of your takeaway from the week in trading this week? Any data came that was very important or technicals? What was the most important thing that you saw kind of play out this week?
Yeah, so you mentioned Blue Sky Discord. So Wednesday is my long streaming day on Blue Sky Discord. And so I was on there for 3 hours that day. And it was so interesting for me because that's when the unemployment news actually did end up being released that morning. And so then I had to process that early run up. Yeah, exactly. So I came into my morning session with the bulls took that news and ran with it because
Yeah.
fundamentally it did come out as positive for our country in terms of the unemployment labor data. And so then I come into market open and it was so bullish that goodness, that could be an easy situation of trying to chase that move up and ended up being a down day and then an inside day because of the outside range. So it was a very interesting day to trade and to consider all the price action that happened that day. And I actually had a mixed results in terms of my trading because it sort of it caught me by surprise the way that it moved in some respects.
Yeah.
And so, gosh, it just was, an interesting experience. And in terms of the daily structure, what I saw was that big flagpole on last Friday. And then, like you said, a doji fest in the middle of the day on the daily chart there. And so for me, my analysis was as that day was rounding out, is this a bull flag or is this a resistance kind of evening star depending on the time frame that you're looking at? Because again, we were approaching that 7,000 level on ES and we were getting resistance from it yet again. And so my mindset that day was, what on earth? Is this going to be a bull flag to finally get some momentum out? Or is resistance again going to hold? And then here we are Thursday we had another red day, kind of fell off. So it's just so interesting how you can think about it, always stay present, have two scenarios in mind. That really helps me kind of stay current with the data.
When I was looking at that Wednesday data, I obviously felt that was a very important data point as well this week with the labor market. And,
Mhm.
you got the headline number coming in here today, or not today, but this previous week. And the headline number was quite outlandishly fantastic.
Yeah.
130,000 jobs, 66,000 was the expectation. Unemployment rate dropped to 4.3, and average hourly earnings was 0.4%. And you got to be wondering, why are you not lifting off on that type of report? And the headline number was one of the best beats we've seen on the labor side of the
Time.
equation for quite some time.
Mhm.
But I think two things happened to really kind of, because a lot of that was pre-market. But I think kind of two things happened. I want to get Riz's take on the labor market as well. But number one, the month over month numbers were good, but there was massive, massive revisions to the downside on the year over year numbers. In fact, I believe March to March was revised down even more than Biden in 24, which was like 845,000 jobs. This one was upwards around 895,000 jobs. And that was in an environment where there was not a lot of jobs created last year. And so, yeah, January, fantastic, awesome. We need to see more of that. If you believe the headline number, that is. But those revisions were quite aggressive to the downside. And the second part of that, if you parse the labor market data out, you'll see a massively important impact that I think is equally important for our country to understand, and it's AI. You can legitimately see where AI is already taking jobs. And where, like, for example, in the January number, what were the two best industries in the January number? Human to human healthcare services was the number one. Okay, human to human healthcare services. As a nurse, you understand you need to be hands on there. You can't just go ask your AI robot to go fix that situation, right? You can't ask your AI robot to go do in-home nursing care, for example. The second leading industry this previous month was construction. Again, we're not there yet with AI robotics to go out there and build those homes. Whereas where you saw financial services industry, real estate services industries, anything on the white collar type of work, a little bit of a concern there. So that's kind of the first point on the labor. Technically here, you said it tested that 7,000 level again. 17 out of 25 days. It's tested 7K and has not had a breakout here. That is I don't know if that's a record on a level, but it feels like it's a record on a level. Riz, what about you on labor? Did labor surprise you? Was it a nothing burger? Is it like, nope, it came, it went, we're moving on? What was your thoughts on the labor side of the equation?
I think, like we had talked about last week, is how important these numbers are due to the government shutdown and then not much other information coming out. Is that the market, unlike other times throughout the year, is relying heavily on these numbers. Now, the unfortunate thing about it is that, you know, we're like in this catch 22. And this is unfortunately the good news is the bad news trap that traders are getting caught in. Is that,
Yeah.
yes, non-farm payrolls, amazing. We beat massively. But the caveat is the government went back and they showed that they actually added 400,000 less jobs than they thought they did.
Yeah.
Whoa. There's the shell shock. There's the shock and awe. The buy the rumor, sell the news. It happens. So, I think that you have that happening. You've also got a massive tech rotation that's happening. You've got, investors are moving away from the AI bubble. The AI bubble is popping. It is a scary trade right now, in my opinion, because it's not making money. Anthropic just dropped a bunch of free tools. We've got what
Software is
ChatGPT.
dangerous. Yeah.
What's
The
that?
software
Yeah.
on the AI side is just flat out dangerous right now.
Exactly. We've got what Open AI. It's going to run out of funding in a year. I think they just dropped that news because they're not
Well, and
making
you
revenue.
got to add on top of that Oracle's credit worthiness right now as well. Like there's real damage on software right now, and that could be bleeding into financial services industry as well. this AI conversation it's deep and it's starting to have real big impacts here, Riz, no doubt. No doubt. So
Yeah, and it's a scary part too because we're still at the break even shift. Is that they have to we have to lose 40,000 jobs a month now, consistent, and keep going to where we can keep the pressure below to where the inflation isn't going up. So I think we have a very uphill battle.
I on the AI side, I agree. And I'll just say this, like there's governments around the world trying to figure out solutions for their country, and our country's having different conversations than what's happening on the AI side. And that's one of the sad realities of the situation right now. We're getting caught with our pants down on AI, and people are going to be the target, and people are going to be the victims here. And it's gonna be an impactful event, but isn't that it's important to have that conversation though, because it is honestly it's a scary thing for a lot of people right now if you have some degree of stability in your job and all of a sudden you see this big bad boy called AI coming down the road, and it's creating a lot of nervousness. And I don't think this is the last time we're going to debate the improving conditions on the month over month, but the negative revisions on the year over year. This is an
Mhm.
ongoing conversation. I'm right there with you as well. Riz, was there anything else that stood out to you this week outside of the labor side of the equation that you feel was a fairly important part of the market story this week?
We also saw the 10-year bonds. We once the employment data hit, we saw a massive spike in the 10-year treasury notes.
Mhm.
Spiked up 4.2%. So where is money going? It's going to safer assets. They're getting away from being risk on, and they're running to other areas of the market so they can protect their assets and not lose money while, they're letting the numbers continue to come out and seeing,
Yeah,
is there any earning reports that are coming out that could give us at least a little push in the market, maybe to the upside, for
Walmart,
those.
maybe. Yeah.
Exactly, maybe Walmart.
Nothing on the aggressive side, though. But you mentioned the market's getting a little bit more defensive here as we're seeing the weakness on the aggressive side of the equation. And I would fundamentally agree with that. You look just this previous week at utilities, for example. Nobody's going to, now I'll be the first to admit these are not your grandfather's utility companies talking about AI and smart reactors, but they're still an extremely defensive area of the market. And when the market's having some, sour moments right now, not utilities, up, 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 up for 3 consecutive days in a row. You look at consumer staples, chock full of food-based companies, and what are they doing? Nothing but up, 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 up. You look at real estate companies, once again, a defensive area of the market, up, 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 up. And so you obviously have seen the market get a little bit more defensive as we've seen a little bit of that weakness come into the tech side of the equation. Becky, when we're talking about kind of the week that was and looking at the all the economic data and the macro side of the equation, how does that impact you on a day in, day out basis as a day trader?
It's a good question because it's definitely something we always have to factor in, and you want to make sure that you always have a strong risk management plan in case something comes out that you can't anticipate. But like we mentioned, and you bring up on the screen for this podcast, is that it's always good to bear in mind the Forex calendar and what you
Hmm.
can anticipate as being a factor in your day. Such as like when there is red folder news, to what degree is that happening? Like what do you need to do to prepare for those moments, and how important are they? Like example, next Wednesday, there is FOMC on that calendar, but is it the same as FOMC meeting and federal funds rate? No, it's FOMC minutes. Now, let me tell you right now, those are very different Wednesdays because when the minutes release, it's just literally the minutes from the meeting. And so it's on the calendar because, one day, however many years ago, it had an outsized response on the market, but it's generally much more muted. However, the
Hmm.
folder is the exact same color as FOMC meeting. And so I just have to say that, spend some time learning what this means and how it can impact your day because certain things are more impactful and others are less impactful. And to kind of know to what degree you have to kind of watch your back on those versus potentially holding a trade through these red folder announcements if you have a really good entry and risk management plan. There's a different approach with that. And so, for example, next Wednesday we have FOMC minutes on there. That's not a big factor for me. I will trade through that if I see a great opportunity setting up ahead of time, because I have studied that and witnessed it and worked
Mhm.
on what that means in my past. And so I know that it won't be as near as substantial of a reaction as the actual information when it's new.
Yeah.
So I do love like bearing in mind
Mhm.
what these folders actually impact.
So I got a couple questions for you, but a statement first. It's amazing to me that the Fed policy monetary statement itself is a red colored economic report, which is the most sensitive, most important.
Mhm.
And 3 weeks later, the minutes, which is a written report on what was stated, which we already know what was
Mhm.
stated, is
Mhm.
also equally important according to Forex Factory.
Really? No.
Um, Probably not. So, like when you look at the economic calendar and you see on the first week of the month, 7 red reports, and the second week of the month, 9 reports, and the third week of the month, 7 reports, and the fourth week of the month, 3 reports. You're talking upwards of 30, 33 type of economic reports that the market would seemingly be suggesting that these are vitally important reports that you have to. Oftentimes, when people see the red, they think they have to trade around it, right? They have to
Mhm.
be extremely cautious around these events. So, if you had to list down, Riz, I'm going to go to you on this one as well. If you
Mm.
had to list out 3 reports that you felt were just the top 3 reports that every trader had to know, what would those 3 reports be? I got mine 3.
That's easy for me. That's a FOMC
Mhm.
meeting and fund rates, CPI, and monthly unemployment labor news.
Riz?
I would do CPI, jobless claims, and non-farm.
And I would do the exact same as Becky. I would do FOMC. I would do the policy statement, not the minutes or the beige
Right.
book, but the policy
Mm.
statement, and then labor and CPI. If you understand those 3 things, everything else is kind of built into those 3 things. Like retail sales, very important number, not exactly the major market mover that it has an impact in areas of the market, but not broadly speaking. And so I would certainly agree with that. I would think there was, in my estimation, I would think that there's probably only 6, 7, 8, maybe 9 reports on a monthly basis that I would truly consider, a red type of report, right? And Becky, how would you teach people or help people understand the reports that you truly have to kind of trade around? Like none of us are going to get in a trade in front of the FOMC. None of us are going to get in front of a trade in front of labor. None of us are going to get in front of a trade in front of CPI. We're going to wait to see a secondary analysis on that. So what would you suggest to newer traders who don't understand the economic landscape to be able to does a new trader have to trade around 10 different economic reports every week?
Yeah. So
How do you get them to navigate around that?
such a great point. And that I definitely would encourage you guys to think about, because you shouldn't high prioritize 30 reports a month. You shouldn't. You should prioritize 5 or 6, and only the ones that are during your trading hours. If you don't trade pre-market, then I don't know you necessarily need to change that for these high volatility moments. But what I have done and what I had to figure out is that when I noticed to be really on edge for certain red folder news when I was a young trader and nothing would happen and be like, what the heck? I thought red meant red. And so then to recognize that maybe it didn't, I actually back tested them for a period over the course of many, many months. When
Yeah.
one would come up, what I would do is pull up the historical data from that day. So when you have a non-farm, look back at the last 6 non-farm days, look at the 5-minute candles within the hour of when that news released. Was it a big move or was it not? And you need to have some data in order to have a comparative analysis to know if one day was outsized and then the others were normal, kind of get some background on that. And if you don't have, I mean, it literally can take 15 minutes to pull up 6 days that you know based on the calendar. It will show you when the last several of them were, so you can go to that specific date in your charting software. I think that having an understanding of what you're looking at, if it's during your normal trading time, so you can factor around it, is important. And for me, I do my pre-market trading hypothesis before I enter a trade in the beginning
Mhm.
of my trading day. And at the top of that, it will say, is there news that might impact my trading? There's literally a line that I have to fill out. And so I would put obviously the red folder news, but then I now say soft red folder or meh.
Mhm.
Honestly, that's what I write, because it's like meh, like it's meh red folder. That might not be a big deal, but I do note it down just to know that at 7 a.m. there is going to be some news that might have some influence in terms of some wicking. It could take out my stops. So if I'm in a trade during that time, I need to have a high confidence and a solid risk management plan. But I will take a trade ahead of it because it's not something that will cause an insane move that will way overshoot my trading parameters. So
Yeah.
that's what I do.
And you mentioned looking at the FOMC meeting minutes next week, just as kind of an example of the color the red color coding and whatnot. What would you suggest is the most important economic report that is coming into the market next week?
Well, I think it probably is that GDP on Friday, and I think the rest of
Yeah.
them are important, but none of them really like jumped out at me, to be honest, as something that I would be nervous for. I would bear in mind them, but none of the big ones for me otherwise.
Yeah, like the Empire State Manufacturing Index, Philadelphia's, manufacturing index, those all kind of get built into the PMI numbers in general, and we got those this week.
Yeah,
So, like, it's not that they're not important, they're just not going to move markets. You know what I mean?
right.
And that's what the important part of the conversation is, because as an investor, there's certain reports that I have to pay attention to.
Hmm.
As a trader, there's certain reports that I want to pay attention to. You have to as an investor, you want to as a trader. And then there's other reports that I just literally do not care 1 ounce about. And in the backdrop, and I'm going to go to Riz on this same question, what the most important economic report for him is as well, but or just data coming into the market next week, because I think that's equally important to understand that data coming at us. Is I agree with Becky 100% on the GDP. Initial claims, very important. I know Riz puts a lot of emphasis on initial claims, unemployment claims, but it is a report we get every Thursday.
Yeah, we
It's a
do.
report we see quite a bit.
Hmm.
The GDP report is a quarterly report that we get once every 3 months. Now we get an update though, and this is what I just want to add to what Becky was talking about in the GDP report is the reason the GDP report is important this month is because it's the advanced version of the GDP report. We know what the previous number was. We're going to get a forecast coming in over the next couple days, and everything that we talk about from an economic growth perspective will be predicated off what this number comes in this week. And so, in a month from now, when we have the preliminary number, it's not going to be based on what the expectation was for GDP and then it get priced in. It's going to be an update to the original number, which doesn't create a lot of volatility, quite frankly. And then the final number you get in the third month of the quarter, and nobody cares about the final number because, like, oh, yeah, we already know we had 4% growth, right? Like, nobody's going to get too hot about that. So, the reason it's important this month is because it's the advanced, it's the most important one in the three versions of the GDP report. And expectations are probably going to be fairly high for GDP, I would say. So Riz, Coach Becky and myself are both on board with the advanced GDP report as the most important data coming into this week from an economic perspective. What would you say is the number one thing you're looking forward to next week? Because this market needs a catalyst. Can we all agree with that? Like this market wants, craves, is literally begging for a catalyst, and it just is not coming. You're probably going to have to get a catalyst, and one of a major catalyst to ultimately break that 7K level in the ES. It's legitimately rock solid resistance right now. So what would you say is that catalyst this week that maybe sparks a little bit of a conversation for the marketplace?
I think with CPI, it's an interesting week. It's going to be all technicals. We got our holiday today, so you can't be mistaken that there's not going to be a trend. It
Yeah.
may be a little bit quiet, but there are going to be technicals to trade off of, and people will be taking positions into the events this week. With CPI, you've got that's kind of setting the stage. So if that comes out hotter than expected. That's going to tell us if we're going to get those rate cuts. And it already seems like we're not going to get them. So,
Not doesn't seem like we're going to get one very soon. I'd say at least a couple meetings there.
Yeah, probably. So it looks like it's going to come in cooler than expected. Lower rates are going to mean a massive debt, for the tech companies. It all goes back to AI. We've got NVIDIA coming up next week as well. So that's going to be interesting it's almost like the snowball is starting to build and roll up. That's the scary part about it, and we've already we've broken some lows. We've broken 24 or 25. Yeah, we broke 25K now. So, Pandora's box is open now. What people were hoping wasn't going to happen.
Nasdaq's
and
straight up down on the year so far.
Yeah. So that's what I'm going to be looking at. If there's weakness in the market with the CPI, I think the market is going to really gravitate to the Friday's report. And, it's going to be interesting. We could see another explosive Friday on us. If the GDP numbers are good, we could see a nice rally into some of those higher highs. But, also look at the Dow. The Dow's not at 25,000 anymore. The Dow has sold off. The Russell from all-time highs, same story for those. Everything that's in there has already overextended. So what more can they give than what they've got? It almost feels like they got to pull back before they want to take that next leg up.
Yeah, and it does feel like the Nasdaq's starting to pull everything down with it. You know what I mean? Whereas for the last couple months, it's been a conversation between the QE trade, which is all the cyclical, and cyclical has been really, really good in the last couple months versus the AI trade, which has showed fair aggressive weakness in the last couple months. You've seen that rotation from AI into QE, and now QE is starting to turn over and pull back, and technology and AI is not offsetting that, and you're starting to see that real pressure to the downside. Outside of the economic landscape, what's one thing technically you'd love to see next week? Becky, I'm gonna go to you. It could be on anything. What's one thing you would love to see technically? Actually, I'm gonna go to Riz first. Becky, I'm gonna give you a second to get your thoughts. Riz, technically, if you could see one thing next week, what would you like to see?
I'd like to see some of the companies in the S&P report some significant margin expansions, because that's what's going to help move the market to the upside. They've already automated high cost administrative and customer service workflow. So it's an interesting thing right now. I see there has to be something to replace it, but I don't think that they're going to replace it at the rate that we're going to lose it. You're going to have massive amount of people, getting laid off. So I think that's going to be the hard part. How do you offset that? Where do you offload all these hundreds of thousands of people that are getting laid off from jobs?
They're not going to get a new job. The AI's taking those ones too. Honestly, there is no easy solution here. None. Zero. There's no easy solution. One solution that most likely will be part of the conversation moving into the future is universal basic income. Taxation of robotics and automation. Any corporation that embraces robotics and automation, you tax robotics and automation, provide a universal basic income to the American consumer. That, whether you agree with it or not, is absolutely going to happen at some point. But it ain't happening this year, and it's not happening next year. And we got to go through Terminator 2, the war. We got to go through that before we get to there. And so there's going to be some difficult moments for our society on this AI side of the equation, especially when, we're not even talking about where robotics is yet. We're just talking about these stupid LLMs taking over white collar jobs. What happens when Elon has 1 million Optimus robots going into every manufacturing hub in America and producing faster and more effective and more efficient without any overhead than every human being has ever done collectively? We're not even close to where the real conversation is on AI. So it is getting a little bit nerve-wracking out there. What about you, Becky? Looking forward to this coming week. What's one thing you'd love to see? Obviously, the economic landscape, we're going to have to navigate that. We're going to do it every single day as a team. But what's one thing you'd love to see just technically next week?
Well, I love the technicals overall. So on ES and NQ, last Thursday we really broke structure on the large time frames, and for me that means something. And so for this week we made a lower high on this larger time frame, and with that break of structure last week in kind of a substantial way with some volatility and momentum. I
Yeah.
mean, I am all for investors and long-term members of the stock market community to get a return on investment that goes up over time. However, pullbacks are a part of the way that this market moves. And for me, we tried real hard at breaking these highs for quite some time now, and we just keep rejecting. And last week was kind of an important break of structure for me on those larger time frames. So for me this week, especially with how Thursday played out today, I'm very curious if we don't have another leg down, which sometimes those last leg downs or this leg down in the landscape that we're looking at can be substantial. And so I know I get a little bit of tease at BluSky and our streamings about being a perma bear, but I mean, I
I
enjoy
I
moving
can't
a
tease you
ride. I'm
being a
not
perma
even gonna
bear with a
lie.
lower high here this week. Like
Today was a
that's
max win kind of
that's a
day, and it
that's a
was,
short-term bearish structure on the Nasdaq. Full stop. You have a lower level of resistance with
I'm
momentum
saying,
to the downside. And so I can't not see that. Like
I'm,
you might be
yeah,
the perma bear and I might be the perma bull. I see things through the through the bullish lens, but I don't
there's a
fight
structure
technicals. I
here.
can tell you that right now. That
Mhm.
stands out to me as well. If there's
One-
one thing I'm looking forward to technically this week, it's kind of in the same vein of what you were talking about, Becky, with the structure, specifically on the Nasdaq, because the Nasdaq's the problem child in the market. AI is the problem child in the
Key of the
market,
week
and not just the
right
AI
now.
trade, but AI creeping into real estate, finance, health, everything, right? So, in that vein of thought, ultimately, when we go through corrections, and I would say that's what we're going through in the Nasdaq specifically, maybe a little bit less in the ES, but definitely on the Nasdaq, there's always going to be a great buying opportunity coming out of these guys. Like
Exactly.
the best buying opportunities you're ever going to have is after pullbacks against weekly corrections.
Mhm.
The best buying opportunity we had last year was not at the first of the year. It was after the recovery began, after the tariff induced pullback there. And so pullbacks can be nerve wracking in the moment because it flips the script. Everybody goes from bullish 2 weeks ago to being like, oh my goodness, we're very concerned now to, no, oh, I'm going to go pop some put options and make it all back, right? That's the ranges of emotion when it comes to that. But I also want you to think about, okay, after all of this song and dance is said, where do we get that double bottom? And so technically this week, I'm looking at one thing here,
The
and it's a
lows.
subset of the Nasdaq, and it's the biggest problem child in the market. It's the software components in the Nasdaq. It is your CRMs of the world. It's your Microsofts of the world. It's your Palantirs of the world. You're a software company. You got concern on you right now, and so that concern. I don't think these companies are going to zero, guys. I just think there's a lot of concern right now, and rightly so, and rightly so. Well, let me rephrase. I don't think all of these companies are going to zero on the software
Don't ask
side.
RQ that.
Uh, I'm not today. I'm not going to ask RTQ that. But every single time we ever go through what we're going through now, where there's a bloodbath in the market in a specific area of the market, there's always going to be end of the world analysis. But now we're staring down the barrel at the 200 weekly moving average, which is a massive, massive support zone. And so what I'd love to see is for this trend to find a double bottom and a double top. And I don't think we're going to get into any type of bullish structure in the Nasdaq and thus in the ES until software bottoms. Like until that happens, we're not getting love in the ES above that 7K level. And so until software bottoms, the path of least resistance is down, in my opinion. And so
Mhm.
I'm very interested to see how this one plays out. Right now, it's bearish. I have bearish trades in software right now, but I am waiting on a double bottom to tell me, kind of like in these moments, I want to think like Warren Buffett, not exactly on a high PE ratio tech play, but when there's blood in the streets, that's where he says that you want to think about long term.
Yeah.
And I think there's going to be some awesome opportunities in software coming out of on the long term. So that's what I'm looking at, number one. And number two is reduction in volatility in silver. And we just haven't seen that yet. And so that's number two for me. Appreciate your thoughts there, Riz and Becky, so much. Let's head over to our last segment here, and that is Ask a Coach. And I got a couple of awesome questions from the community here this week. I'm going to go to both of you on this. I'm going to start with Riz. Riz, what is something that you believed early in your trading career that you now completely disagree with?
It was going to be easy to make money in the market.
Talk to me.
I think that was the biggest kicker. Seeing folks post on social media what they were doing, and the things I would see on TV. I'd be watching Bloomberg and MSNBC and stuff, and I just thought it was going to be easy. I thought it can't be that hard. It can't take me that long. If I sit there for 2, 3 months, full time, I'll pick it up quick. I can
Yeah.
pick it up. That's exactly what I thought when I first started trading. And yeah, that was wrong.
It's a great one though, because I remember my first time I hit my first three trades in a row, Riz. All swing trades, short duration trades, hit them all. And I was like, oh my goodness, I'm gonna be out there at race next week. This is fantastic. Uh, Market has a tendency to teach you very valuable lessons of it's not that easy, guys. If it was easy, everybody would do it. It takes discipline, takes hard work, takes dedication, takes, honestly, as much as anything, working on yourself and knowing exactly who you are from a risk perspective and knowing what your relationship to the almighty dollar is. And so I think that's a fascinating answer there, Riz. What about you, Coach Becky? If there was one thing that grew up as a trader saying, yep, I believe in this to my core, to my core, to my core. But now you're like, yeah, I'd want to go back to that younger Becky and be like, ooh, you got this one wrong. What would that be?
Well, my first inclination was in alignment with Riz that I thought it would be easy when I first started. But as he was talking, I had to rethink my answer, not gonna lie. So what I have to go with actually is that that you that that you would have to do so much psychological work. And I'm not
Mhm.
just saying that because that's my jam. I'm saying that because I really underestimated that for myself. I thought I'm a pretty solid person. I am a mom. I have had a career in nursing for many years by the time I came to the market.
Mhm.
I wasn't a teenager. I think you develop maturity as you age. And so I really thought I'm pretty solid psychologically. I'm pretty solid emotionally. I have progressed in my life. I thought that I could handle the fear and greed and money and the P&L flying all around. And I was humbled in that respect so much because I didn't realize how much I had some internal psychological barriers that were really holding me back and encouraging me to blow it all up every time I would get little modicum of success. And so for me, I think I wish I had respected the psychological work that I really should have dug into sooner instead of trying to bury and ignore as long as I did, because that's what actually really changed my trajectory as a trader. But I did not dig into it and respect it enough for me earlier. And that was really a game changer that was real. It was a real part of learning to be a good trader for me.
It sparked my curiosity here, Becky, and that can be a dangerous thing sometimes. But we're gonna go down the road with this one.
Okay.
Was there a scenario? Because I love your answer as well, and I have similarities there as well. Was there a moment in your life, personal trading, otherwise, that made you understand the psychological component working on yourself was equally as important as working on your technical skill set?
I think it was a period. I think it was the winter 3 years ago, actually.
Hmm.
I think it was, I really got very good at my technicals. The method that I had learned for trading, I could see an A plus setup every day. And
Yeah.
I felt really confident in what I was learning and how I could execute that trade. And I was not consistently profitable. And I started getting so frustrated. I was crying more. I was complaining to my mentor. I was really experiencing a lot of emotional swings
Mhm.
because I was mad that I could see a good trading setup and I was not able to reap the rewards of that. And that's when my mentor and the kind of the business hit the fan
Yeah.
of like it's clearly not so much strategy anymore. I feel like I have a decent understanding of market structure and context and setups. So what on earth is the problem? And so that's just sort of finally, I guess it finally clicked where I'm like, maybe I am the issue of like giving into these emotional urges in certain situations and what is the catalyst. And so when that finally started to click and I started to actually switch what I was reading, start consuming some more psychology directed content and digging into the homework that would come with those books and presenters and stuff. And I started to shift the way I was thinking, and then my outcome started to shift, and then it clicked that it was real and I was on the right track. And this is where I did need to put my energy. So it was like a season of like, it really
Mhm.
just had to hit me in the face of like, I see the trades. Why don't
Yeah.
I have the P&L?
I just love this conversation because I keep thinking about my own personal journey as you're talking here, Becky. And again, a lot of commonality there. I was the analytical cutthroat, know-it-all type guy when I was first young trader and very aggressive as a trader. And, market taught me some very valuable lessons that you got to leave your pride at the door in this business. It
Yeah.
ain't about being right. It's about
Yeah.
making money and cutting losses. But I didn't understand like I didn't really truly start understanding who I was as a trader until I started working on the mindset.
Mhm.
And I got a mindset mentor kind of like you did, and really started working on that proper mindset and my relationship to money,
Yeah.
because there's a famous book called Prospect Theory, or there's a famous theory called Prospect Theory, and it basically proves to you that you have to rewire the way you think about return versus risk as a human being who grows up in a society and has propaganda and certain habits were taught to us by our loved ones, our community, whatever it is, doesn't necessarily mean it's true. You have to, and as a trader, as an investor, you have to think differently in terms of reward and risk. And so once I'd learned that, I was like, oh my goodness, how many other things do I have to rewire up here? How many other things has my dad, who I loved, but I would consider him my poor dad, who taught me the value of hard work and go to school and go to school and hard work and hard work and go to school. But how many things do I have to reprogram to think like not the guy that has to go to work, 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 and the guy that has is the guy telling other people to go do things like that. You gotta rewire this up
Yeah.
here, and all the technical conversations in the world, all the fundamental conversations in the world, all it doesn't change the fact that you have to rewire this. And so I just absolutely love that answer. Um, Appreciate both of you guys on that answer. Man, you guys are killing me right now.
What about
Um,
you?
well,
Yeah.
honestly, thank you for asking. I do have a specific one.
Okay.
For me, it was covered calls. I was a day and a swing trader. That's kind of how I grew up as a trader, as a day and a swing trader. I didn't think long term, like long term for me was like 7 days. Like that's, whoo, man, I can't think past next week. Um, but when you're 27 and you think you're made of steel and nothing's ever going to happen and you're never going to grow old, you don't have the context. And I remember when I first sat in one of my classes, when I was learning how to trade, there's like, hey, you gotta learn covered calls. And I'm like, what? What? You go do your covered calls. So who cares about covered calls? Like I'm here day trading and swing trading. And I had this guy being like, no, you should learn covered calls. Go learn covered calls. Even if it's just a small sum of cash flow, start compounding that. You'll just thank me later. And I'm just like, nah, nah. Well, seven years later, I learned the value of cash flow compounding covered calls very, very aggressively, and it changed the way I saw the market. It changed the way I saw portfolio design. It changed the way I saw everything that I did in the market. And what I began to believe, and what I now have as a core principle is day trading and swing trading are a hell of a lot easier on the mindset that you talk about up here when you have other areas of the market doing other things for you. For example, as a day trader and a swing trader, you don't really do a lot of cash flow strategies. You do no compounding. Everything is one off, one off, one off, one off, which means it doesn't have a lasting impact 5, 10, 15, 20 years from now. Whereas if you take even a small sum of cash flow from a covered call, compound that back into the stock, all of a sudden you're getting money working for you over time instead of you having to work. And what really kind of stood out to me was, Robert Kiyosaki, who taught me the value of passive versus active income. Everything we do as a day trader, guys, is active income. Everything. Everything we do as a swing trader is active income. What's the name of the game, honestly? It is passive cash flow to offset expenses. That's the rat race. You want to build up your passive cash flow to offset your expenses. And as you do that, as a day trader and you take a loss, think about this. You're not losing any of your principal, you're losing a portion of your cash flow. And it's just it's a healthier mindset, in my opinion. And so I do think that's me being the stubborn 27-year-old dude that I knew I was, saying, oh, covered calls are trash, terrible. That belief cost me money and cost me heartache and cost me headache and cost me pain. And luckily, I had
You learn.
awesome traders around me to teach me the right ways. So that was it for me. All right, question number 2. Who do I go first? Did I go Becky or Riz first on that one? I think I went Riz. We're gonna go snake draft here. I'm gonna go to Becky. Becky, have you ever I love this question by the community as well. Have you ever seriously considered quitting? And if so, what actually stopped you? And I'm willing to bet there's people in our community that consider that every single week.
Yeah, I have considered it many times in a soft way, but one time I really I did quit, and I was a year, almost 2 years, shy of 2 years, over a year and a half into my training career. And I thought again that I should be profitable by then because it looks easy. And from all the things that you can see on social media at this point, I should have a Lambo and I should have an upgraded property and vacations. So what is wrong with me? I can't do it. I don't know what I'm doing. This is never going to work. Like, it hit the fan of like the comparison issue where you see success out there, and which is a skewed view at best. It's saying it kindly. And I really thought that I should have made it by then, and maybe I never would. And I was frustrated about the losses and the resets. And so I decided I was getting pressure from people who didn't understand trading, of like, why are you having these hard days when you don't have to trade? You have a career, blah, blah, blah. So I'm like, fine, I'm just going to be the best nurse ever and let it go. And I announced to my community and my trading friends and my husband that I was going to stop trading. And then so then that was on a Saturday night, and Sunday I literally could not get out of bed. I was crying so hard, and I was like mourning. I was like, I can't believe I quit this thing that I love and I believe in and I'm really good at. And I was so sad that the idea of not actually doing it. And so at the end of that day, I was in my office setting up my charts for Monday morning because I'm like, clearly this isn't going to work. Like, I'm way more sad with the idea of never trading again and not figuring this out than I was on the hard days. So clearly, I think I just have to double down and back off and maybe give myself a break, recognize that maybe I'm pushing too hard at this, and maybe a Lambo by Christmas is not actually like a reasonable plan.
No.
And so I did, like, I reached out and I was like, okay, sorry about that fake out quit. Help. And so then I sort of readjusted my approach. And so that one time I did very seriously quit for a day, and that failed for me. But it's hard. I get
Lucky for all of us, it did fail for you. Like this is one of the ones I'm actually very happy that you failed at that attempt there, Becky.
Thank you.
In terms of, and I'm not talking about a break. Every trader takes breaks.
Yeah.
I'm talking about quitting. What about you, Riz? Have you ever seriously considered quitting trading?
I think when I first got started trading, I did. The thought would cross my mind. I mean, I joke about it now, but now it's more so a joke. But I think as I got like a year or so in, I was really having like a kind of a come to Jesus. Was it worth the risk? how much it's a lot of stress to take on, especially if you're a full-time trader, because almost everything's on the line constantly, and it's a manner of work that nowhere else anyone else will work, because any other job you got your severance, they can't fire you, you're going to get your check for the time you work, stuff like that. And the market doesn't offer anything like that. There's no safety net, there's no, oh, I'm sorry, there's none of that. And Becky was mentioning earlier about change. If there's anything that the market has taught me, is more about myself. Beginning to become a day trader became like a huge self exploration for me. Like, I feel, and I've said it at times, is I feel like I'm the best person I've ever been now because of me being a trader, because it made me look at myself and reflect on myself in ways I never had. And then, from my background, I never really had that kind of doubt. It was just do this, execute this.
Yeah.
You got to do this. You got to wake up early and put in the time. And trading is not like that, because it could take you, even if you do that for 2 months, 3 months, 6 months, a year, you may not see the return yet. It may be something that you need to invest in yourself 3 to 4 years before you see that return.
Yeah.
But there's nowhere else that you can get the kind of returns that you can get as a day trader. If you want that Lambo,
it's just the truth.
yeah. If you want that Ferrari, you want that Lambo, there's only one way to do it, unless you're going to become some CEO, or you're going to an innovator or something like that. That's just the cool reality now. You're in these handful of scopes that you'll be able to continue to have.
And Riz, I'll do you one even more on that one. What else are you going to do in the age of AI?
That became the question for me. Is that I know what
different plan than getting that job. There has to be.
Yeah, where would I go with my background and what I've done? I couldn't just go work for someone, and this just felt like this feels like where I'm supposed to be.
Riz, I kind of feel like you're Cortez, and you burn the boats, and you're like, there's only one way forward.
Mm-hmm.
There's only...
Yeah.
Don't complain, don't moan, just move forward.
Let's keep rolling. Just keep rolling.
Yeah, don't stop, baby. Becky and Riz, I absolutely loved the podcast here. I absolutely enjoyed the conversation. Thank you so much. Let's go to final thoughts here. I'm going to go to Becky first. Final thoughts, and then Riz.
Yeah, I mean, even though I see this market as some bearish energy right now, dudes, stay safe and always manage your risk management, because whatever time frame you're on, you got to wait for those signals and not trade a bias. So for me, I have to remind myself of that every day, of no matter what my bias is, I'm going to lock into my system, my strategy, and how I best manage my trading business. So I would encourage you guys all to lean into that kind of energy with anything you're doing in trading.
Coach Riz.
I say get ready for a volatile week. If you're trading the options, get in early. I would say to try to see if you can take a swing position in early in the week so that you can find a good entry. Give yourself some cushion, or buy time. If you're trading the futures, keep an eye on the 10-year bonds. 10 years bonds dip 2.4%. You know what the plan is. We're going short. We're going deep short. The weakness is there. The blood's in the water. Will the sharks attack? I think they will. I don't think they're done yet. Good luck, traders.
I don't think they're done yet either. It's going to be a very interesting landscape. And one of the reasons I don't think they're done yet is they've actually had some pretty good data in the last month from an economic and an earnings perspective. And we haven't went up.
Yeah.
It's a little bit telling to me. EPS, blended growth, earnings is great. Blended growth at 14% growth right now. One of the better numbers in the last 4 years. GDP's over 4%, inflation's at 3%, average earnings growth's at 3.4%, and the market's like, no, we don't like that.
Yeah,
Something's wrong in the market right now. So I certainly agree with that. My final thoughts are really, really simple. come sunshine or rain, it doesn't matter to us at Blue Sky. We are always there every single day in our streams and our content, helping you navigate the financial world on a day in, day out basis. And, as a trader, sometimes we can feel like we're a small fish in a very big pond. So why don't we just join forces and come together and let's be a bunch of massive fishes together. So come join us over at Blue Sky, ladies and gentlemen. We're running streams every single day trading, covering the market, talking swing trades, a lot of different types of conversations. We got the amazing, one of the best traders I've ever seen live trading every single morning out of Mike. Riz streams right after that. Becky, myself come into Power Hour. We got educational trading labs every single week for the Blue Sky community as well. And so if you're looking to be a part of an amazing community that will care for you, help you navigate the financial world, give you the education you need, and also have some amazing plans that you can pick from as well, come over to Blue Sky, use code WELCOME26, and you can get 50% off any launch plan out there. We appreciate you turning into the Skycast podcast. Hit that like and share on your way out the door. If you love the Blue Sky podcast, you love Blue Sky in general, tell a friend about it as well, and we'll see you next week.
Bye, everyone. Take care.
Okay, week.